Good afternoon. Sunday, 6th of April 2025. Welcome to another episode of Wealth Nirvana. Now, as always, I want to put a disclaimer that this is not an advisory platform, it is an investor education initiative, and I would like to keep it that way. Now, we all know what is happening across the world economy. Tariffs are the talk of the town, and US has begun imposing tariffs on many countries. China has, of course, retaliated with a 34% levy on US goods. So, what does this lead to? I think the first biggest risk is that demand might slow down. Second is inflation back home in US might be a problem, but I think Trump also promised tax cuts when he was elected. So let's wait and watch what he does on taxation. For India, I think people are debating about the direct impact being lukewarm, not much, but I feel there is going to be a collateral impact as well. I think as we go along, we'll have more clarity on what country imposes what tariffs, how prices rise on various products that we import, because remember, India is a net importer. We import a lot of goods from China, biggest being electronic goods, and so on and so forth. So what does one do from here? Now, if you look at how Nasdaq closed on Friday, it was about 6% down. I believe it could have impact on all world stock markets on Monday. But having said that, this is short term. How do you look at the next 6 months, the next 1 year, or the next 7 to 10 years? So as long as there is demand in India, there is addition to the middle class, the consumption is robust, I don't see any risk in the long run. What will happen in the short run is that the excesses which were already getting deleted from the market will continue to do so, maybe more aggressively this time. But what one should go back and do is revisit the investment policy statement. I know I keep on repeating this, but it is so very important. Have a discussion with your wealth guardian. Discuss how would you react if there was a bigger cut in the market. What are your goals? Are you prepared for those goals even with these cuts? And if you are, then there is no reason to worry. As long as you are having the right asset allocation and the right strategy to achieve your financial goals, irrespective of what the market does, I think you're safe and sound. Only when we get carried away by too much greed or are bogged down by too much fear that the problem starts arising in a portfolio. So I think revisiting, as I mentioned again, revisiting your strategy makes a lot of sense. Realign the portfolio. If you have to continue to buy, I think the next 6 to 12 months or maybe 18 months provide a good opportunity for people who have long-term horizon. Now, don't get swayed away by people trying to link it with the Great Depression period. We don't know. It could happen, it could not happen. But I feel that central bankers these days have much more tools than they had in those days. And we have our learnings. Hopefully, we have learned our lessons, and right actions will be taken by the central bankers to support the economies, and stock markets eventually will reflect what the economies tell us. So I want to wish each of you a very good financial year, good tiding away in these volatile markets, robust portfolios, and all the best. Thank you.